Hi all, it's your guy here, the unknown, and today I want us to look at something very important, and that is actually how to prepare for the best trades. Okay, first of all, it's not about catching moves, it's not about guessing directions. Okay, it's about preserving your capital. Okay, because your capital is everything you have, and once you deplete it, then you're out of the game completely. And I love using the example where we talk about us being hunters and we are hunting for the best trade. So it's like, even if you are an hunter who is hunting for animals in the wild, if you have roughly 10 bullets, you can't be shooting at birds. Okay, if your target is maybe to hit a springbok, a buffalo, or an elephant, obviously you want to preserve your ammunition for those kind of animals. If you have 10 bullets and you hit 10 birds, and then just after hitting the 10 bird, an elephant passes, what will be left is regrets. Okay, so you don't want to regret, you want to save your capital for the best trades. Okay, you don't want to be out. Okay, preserve it. And when you start to preserve your capital, you realize one important thing, and that is actually the fact that now the most important thing is prioritizing quality trades where you'll have high probabilities, okay, of winning. Personally, I think the word winning is not the right word to use because it makes it sound like gambling, whereas this is a business. Okay, so you need to focus on probabilities. Okay, and let me just show you something quite quick right here. This is my these are my rules. Okay, my day-to-day rules, and I want to share them with all of you today. Okay, so here the most important thing for me is the pair must be on day 3 or on day 2. Okay, if I get a first green day or a first red day, obviously the next day will be a day 2, and that's why I'm looking for a day 2 continuation. It could be day 2 longs or day 2 shorts, but it's a day 2 continuation, and the pair must be on a day 2. So when I'm analyzing, I'm gonna select pairs that have given me a first green day or a first red day, okay, in the best way. Okay, and we'll explain this going further. Okay, or if it's a day 3, I know that okay, on day 3 is most likely they are more likely to reverse. Sometimes they will give a continuation. Okay, so that's why I need to target pairs that are on day 3, because most of the time it's gonna be a reversal. Why? Because they pull traders into one direction. Remember, trend is your friend. Okay, I'm not here to dispute that, and I'm not saying that is wrong. However, indicators on the 3rd day are actually reporting the underlying trend. And again, human behavior, people are more likely to believe something on the 3rd attempt. So now you see that on the 3rd day there's a lot at stake. That is why most of the time on the 3rd day market makers will be ready to punish. Okay, so the pair must be on the 3rd day or the 2nd day. Okay, so these are two different setups. Okay, we've talked about this too many times. Okay, and 50 pips, guys, 50 pips per trade. You see, less is more. In reality, less is more. Greed is dangerous. Besides, this industry is moved by greed and fear. Okay, so greed is one of the most dangerous things. Okay, 50 is more than enough for me, because I don't want to get 200, 300, 500 pips in a trade. The reason is it's easier to get 50, and by targeting 50, for me personally, what it has done is it has enabled me to shift my mind from prioritizing number of pips, okay, to prioritizing quality and size. Okay, so when you prioritize 50 pips, obviously you're gonna prioritize quality, because you need a trade that will hit your pips quite quick. If it can be hit in less than an hour, that's good. If it can be hit in less than 20 minutes, it's good. Okay, and it's much more easier. Okay, and most of the time it will be hit quick, rather than prioritizing 100 pips that you won't get every day. It's easy to get 150 pips on different pairs every day. Okay, and obviously, honestly, when you prioritize 50, you are also prioritizing high lot size. Okay, and the more you become comfortable with taking high lot on a 50 pip trade, then you are actually gonna make more. Okay, so as the second thing for me is maximum 2 trades per day. I told you less is more. I want to filter all the garbage out. Why? Because I actually want to remain with high probability trades. I told you in the example of a hunter, okay, if there were no birds, well, then there will be no reason to actually deplete your ammunition. But for a person who depleted the ammunition trying to hit birds, that's because there was a distraction, which were obviously in this case birds. Okay, if there were no birds, obviously the person could have saved those ammunition for the elephants. Okay, so in this case, I want to filter out all the nonsense that might just trigger me into trying to take less quality things, or just to guess, or do all sort of stuff. Okay, less is better. If I have two pairs and one out of the two sets up in a good way, then I'm gonna take one. Enough with that. 150 with a bigger lot size, it's way too much, and it's more than enough. Okay, and another thing here is I do not want to open a position before the equity time. No trade before the equity opening time. I always focus on the equity time, which is obviously my favorite session is gonna be the US. But again, it also depends on the pair that was ready for the next day. If it's GJ, obviously I'm gonna be looking at the London session, because that's when the pound moves well. Okay, so yeah, that's something. Okay, but I will not execute any position before the equity opening time. For London, it's 3:30 US time, and for US, it's gonna be 9:30. So for me, because I'm in South Africa, for London it's gonna be 10:30 a.m. and for US it's gonna be 4:30 p.m. Okay, so another thing, I prefer a 3-session setup. Okay, and just to explain this, because I think like I have to explain it, okay, before we even go for. Okay, so a 3-session setup, say for instance, prices have been going down for a number of days, and then all of a sudden on this day, okay, they come down and then they come and close here. Okay, so say maybe they've been going down for about 3 days, and then on this day they opened here, they came down, and eventually they closed here. Okay, so this for me is a first green day. Why? Because prices have been going down unidirectional for a number of days. In this case it's 3 days. Okay, and then on the day itself they did send people down, so they showed people that they are selling. Because why? Actually, the reason why is because market makers actually will dump prices when they want to buy. They'll show you that prices are selling, and then when everybody sells, they are buying. Okay, and then that's where the reverse. Okay, and say maybe the prices close here on this day, so on the following day, this will be on a day 2, right? What I'm looking for is a dump for a pump, right? Okay, let me zoom out what I'm looking for on this day, and I'm gonna zoom out this portion right here. Okay, so this portion will have 3 sessions. Let's say the first session is Asia, it's lined out like this, and the second session is London, it's lined out like this, and the third session is US, and it's lined out like this. Okay, these are my session boxes, and let's say okay, we want this part where prices dump, because I'm not a market maker. I'm not gonna try to get the dump and again get the pump. I'm not a market maker. You have to allow them to make the market, okay, to trap and do all the sort of things, and that's when you will get your best entry. So for me, let's say the first session, which is Asia, took prices high, they came and hit here, and then they continued going down, and then they came, and this is where maybe the US session opened. Okay, it opened here. Who is in profit in this case? Obviously people who are in profit are these guys over here. Let me just try to erase something for everybody to see, because I think I've messed up here with the circle. Okay, so if you look here on this day, this is the previous day, this is the high that was reached. Okay, so these guys are in profit. Okay, these guys, people from yesterday's high, are in profit. Okay, this is another day, and this is the previous day where prices went up and pulled back. So these guys over here are in profit. I'll just draw my line through. Okay, and even people who sold here during the Asian session, they are still in profit. Okay, let me just use a different color, okay, for this, so that it can become visible and everybody will understand. Okay, okay, I'm just gonna go through this quick. Okay, say this is the high of yesterday, these guys over here are in profit, and say maybe people who sold during the Asian session, these guys over here, they are in profit, and people say, for instance, who sold during the London session, these guys are in profit. Why? Because you know that, as we said, 1 2 3. Okay, this is why I love the US session very much, because it allows 1 2 3 that people who chase prices from the Asian session, people who chase prices from the London session, and people who chase prices when the US start. Okay, so right now we know that these guys are in profit, and today it's a day 2. Okay, yesterday was a first green day, because prices have been dropping for a number of days. Okay, remember what we have said and remember the example we've used. Okay, so say the London session is opening right here, and maybe the equity opens right here on this candle. You see, I said, what did I say? I said the equity is more likely to throw a stop hunt. So in this case, most of the time, who will be in profit? Obviously, these guys over here will be in profit before the US start. There are people who are gonna buy here, okay? And somebody will say, how do you know that people bought? Some people will give nasty comments. Obviously, we have millions of people trading from homes, and people are executing at almost every price or significant price level. Okay, so there's no question to ask, how sure are you that people bought here? No. Okay, you can do better than that. Okay, because we have people trading from all over the world. Okay, so there are people who are counter trending, there are people who are following the trend. Okay, so we obviously know that there are people who are actually in profit, who actually bought from here. Okay, so this is why when the US session opens, we are inside the high of London, we are inside the low of London, as you can see when the equity is opening. Okay, I need the red color right now. Okay, so we are inside. Okay, it keeps giving me green. Okay, let me select this one. Okay, this is red. Now we are inside as the equity is opening. What is the equity more likely to do? It's more likely to come and close these guys who are in profit, because market makers are greedy. Firstly, they don't want to go in a direction with retail guys. They want to hit the hell out of the retail guys before they go. Okay, so this is gonna be a stop hunt. Sometimes it could be a pin, sometimes it could be rare tracks. Those are things you must understand, and that's when they will just reverse prices. And this move is quick. This is the move I am looking for every day. Why? Because this one is quick. Okay, you might find, okay, if I'm looking for 50 pips, this is my 50 pips. Okay, and what do? Because I said already that I'm looking for 50 pips, but in reality, this is what I do. If I want to open a lot size of 1, for example, okay, I'm gonna open 0.3. okay, 3 positions of 0.3, which will give me 0.9, and then lastly I will have a position of 0.1. When all these are combined, they are gonna give me a lot size of 1. Okay, and 2 of these 0.3 positions obviously will target the 50 pips. Okay, and they will automatically be hit. I'm not gonna trail, I'm not gonna do anything. They will be hit immediately when the prices get to this level. Okay, immediately when prices get to this level, they are gonna be hit, and I'm gonna be remaining with 0.3 plus 0.1. All this together makes a 0.4. And somebody will ask, why didn't you use 0.4? Obviously because I don't want to open to use my lot size when I'm entering. I'll do a video about this. I want to scale in as the move is going in my direction, add more positions as the move has already confirmed, because sometimes you realize that, okay, you got in, but the market had another plan. Maybe there was a lot of orders here which were buying, because sometimes this could be a rare track or a pin. Okay, and a pin will obviously trigger many people into buying. Okay, so maybe many people bought here, so the market makers can come down and reheat this level and close everybody else before going up. So if you entered, yes, you entered correctly, but you realize that, okay, they went down and they closed everybody else, which includes you. So I don't want them to hit all my lot at once. Okay, I will add a lot when they go and then pull back and then give an engulf. That's where I will be able to size in the other positions. And as I say, 2 position will take here, and the other ones I will leave them to go, because my target is also here. Take profit 1, take profit 2. Okay, this is my target. However, when they reach a level, maybe here, I'm gonna trail my stops from the remaining positions and put them at 50%. So even if they go back without hitting these guys, already all my positions will be at a position where the profit is locked. So this is a 3-session setup, and this is what I usually prefer. Okay, if I get this, wow, this is amazing, and I will be looking to take it. Okay, so again, I think now we have discussed this. So I'm obviously looking for a pump to dump or a dump to pump. Why? Because market makers will pump prices, that is, take prices high if they want to buy. I mean, if they want to sell, they will take prices high. Why? Because when prices are being taken high, they are showing you that, let me explain this. Okay, let me explain this. What is a pump to dump? Okay. Let me just say pump to dump. Okay, this is a pump to dump versus a dump to pump. Okay, this is gonna be a dump to pump. Okay, this is a dump to pump. Okay, so I'm just gonna put a thin line in between so that we can distinguish the two. Okay, so if you look at my previous example, I did say, okay, this was the high of yesterday. I did say if it's a day 2 for continuation, I will actually be looking at a dump, okay, for a pump. I will get this pump. I'm not a market maker. I'm not trying to catch this. Allow them to play out, okay? Allow them to show you their hand, okay? Then you can get the other part. That people want to be trading every minute. Guys, you can catch all the things, okay? You must be disciplined, okay? Because already we have mentioned that the most important thing is preserving of capital, okay? Okay, I said I'm looking for the dump to pump, okay? So obviously, I'm going to start with this one. If I want to buy, I'm going to be looking for prices to be dumped. Why? Because market makers will always dump prices so that they can buy low. Remember, they buy low, okay? They buy low, and they want to show you that prices are selling. When they do this move, what are people doing? People are selling because people are chasing moves. When people are selling, one thing they don't realize, and this is one thing most traders aren't aware of, one thing they don't realize is that they are actually selling low. They are actually selling let me show you. Okay, when people are selling like this, they don't know that they are selling low, okay? They are selling low, okay? Why? Because market makers want you to sell low. When you sell low, they are able to buy low, okay? Business sense, business 101. If you want to be selling something, you can't buy something high and sell it low. You want to buy something low and sell it high, okay? This is what market makers are gonna go. Who's always winning? You will ask yourself, why are people actually selling low or buying high? Because market makers will always show you a move, and people are impulsive. That means they take impulsive decision, and whenever retail guys are taking impulsive decision, they will be punished. Remember, there is the statistics that has been maintained for decades and we already know that markets will cease to exist if the tables have turned, okay? So market makers are always gonna win because retail traders are actually losing. There's a statistics that says 90 to 95% of retail guys are losing. If you don't believe me, go to brokers, go to the footer. Brokers are required by law to publish this. They will tell you that on this broker 90% of people are losing, and go to another broker, 90% of people are losing. We know that 90 to 95% of retail guys are losing. Why? Because when market makers want to buy, they will drop prices so that they buy low, okay? And when they want to sell, they will pump prices. And when retail guys see this, oh, they get too happy. We are buying, we're not catch the move. Whereas in reality, this is just something, it's a trap from market makers, because market makers want to do what? They want to actually they want to sell high. So when people are buying, market makers will be selling. Remember this. For one to sell, somebody has to buy. For one to buy, there has to be somebody willing to sell at that price, okay? And we know 90 to 95% of retail guys are losing, okay? This already shows you why retail guys are losing. They are chasing moves. So now this makes sense why we always look for a pump to dump, or we look for a dump to pump, okay? That's why I told you that if it's a day 2 continuation, day 2 of longs, okay, I want to see a dump, because when they are dumping prices, obviously what are they gonna do? They are gonna be buying. The same applies to this day 0, because I told you that a red day has to send people down. When they drop prices, that's where they want to be buying. They want to buy at a very low price and sell at a very high price. So this explains this rule right here. Okay, I want a pump to dump or a dump to pump, and I'm not a market maker, okay? I'm not a market maker. So since we are not market makers, you can't expect to get this move and get this move, okay, unless you are highly experienced. Okay, so it is what it is. Once they show you their hand, you know that they are gonna buy low or they're gonna sell high. You know that they're gonna buy low or they're gonna sell high, and that's what you want to be doing, because you want to be going in line with them. Hence I said the markets are not for smart people. Why? Because most smart people are failing when it comes to the market, because it's the other way around. You don't have to beat the market, okay? Just align yourself to go in line with them, okay? Understand what they're doing and do what they are doing, okay? Guys, I always say they will show, they will trap, they will reverse. Every day they're gonna do this, okay? They will show you that we are taking prices up. Okay, when you buy, they pull back, they give a pattern, you are trapped, they reverse to punish, they show you that we are taking prices down, you sell. And when you sell inside this box, that's why I always use a box to identify trapped volume. If you have been following this channel, you already know I want to see trapped volume before I do anything, okay? Because I know they're gonna show, they're gonna trap and reverse. So this is the most part that interests me. The moment I realize that, okay, there is trapped volume, everybody going high right now is trapped and they are gonna get punished, that's where I want to get in, okay? So guys, this explains my rules over here. So now I had something planned out, because remember, we are trying to make everything easy, okay? This is gonna take time. Already we are 30 minutes into the video and we still have a lot to explain. I don't know if I'll break this. I'll have to break this into parts, or else I can just upload it and you'll watch whichever part you feel comfortable to watch till you understand it, okay? So let me go through the explanations quite quick, okay? So here's the most important part. You need a setup, okay? And fortunately, I've already said that I need them to be on day 3 or on day 2, because on day 3 most likely they are gonna punish, that is to reverse. Sometimes yes, they're gonna continue. So we don't enter blindly, and we will explain everything, okay? So we need a setup. Either prices have to be on a day 3 of rally, or they have to be on a day 2. That means they're given a first red day or first green day yesterday, okay? That means if they gave a first green day or a first red day yesterday, it means today will obviously be a day 2, okay? So if yesterday they gave a day 2 continuation, obviously today, if they don't give an inside day, they will be on day 3, okay? So we don't enter blindly. We will have to first observe the behaviors. So we have 2 setups, okay? 2 setups. It's a day 3 and day 2 continuation. This one is easy, because what you look for is a first green day or a first red day, okay? And let's explain a first green day. Which one should we start with? Actually, let's start with the day 2 first. We are starting with this. No. I feel like let's start with with this side, okay? Where we are talking about no. Okay guys. Oh, let's start with day 2 continuations, okay? Say for instance, prices have been dropped. This is day 1, okay? And then prices okay, let me just erase this, and I need some order right here, okay? Let me look for a line. Okay, I don't get a line. Let me look for a line. This is a line, okay? I want this line to actually be straight. This is day 1, this is day 2, it's gonna be day 3, right? This is the 3rd day, okay? Now let's just show it the whole week. This is the 1 day, 2 day, 3 days, okay? And then we need another day. This is another day, okay? And then now we need the last day of the week, which is mostly Friday, okay? So this is what we have. We have 5 days, okay? And let me just say day 1, okay? Oh, this is day 1. This okay, day 1, okay, it's fine. Let me just type it in rather than dragging it. Let me say day 2, okay? Quite quick. Let's go to day 3. Okay, let's go to day 3. what am I doing, guys? What am I doing? Let's go to day 3. Okay, yes, we will drag it up. Let's go to day 4. Yes, we'll drag it up. Okay, let's go to day 5, which is our Friday. Okay, day 5. Okay, 5. This is it, guys. This is it. We have 5 consecutive days. Okay, and let me just take another line right here. Okay, separate this. Okay, let's say, for instance, let's say prices have been going down. Say, for instance, prices on this day, they went down. Okay, okay, and on this day they went down again. Okay, and on this day they gave an inside bar. Okay, notice the low is not broken, the high is not broken. Okay, 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 it's fine. And then on this day they went up, and they went let's say they went down. Okay, and then obviously they came and closed here. Okay, okay, so we have day 1 of prices dropping. Okay, we have day 2 of prices dropping. We have an inside day which is just even. Okay, and then we have a day 3 of prices dropping. So this is basically day 3. Okay, I'm using an inside day, or an example with an inside day. Why? Because most people do not understand the day the inside day. This is just a pause. Okay, this is a pause. Okay, in this case, let's take it as a pause. So we have 3 days. If I am to take the line again, okay, oh, unfortunately already I'm in a box. Okay, it's fine, I can't do that. But this is the high. This is the high of Monday. Let me use a green color. Okay, let me use a green color. I hope you're gonna understand this. This is the high of Monday. I need a darkish green color. This is the high of Monday. Okay, I need a thick green color. Okay, okay, this is the high of Monday. Okay, yes, and then this is the low of what? This is the low of Monday, which became the high on this day. Okay, the high of yesterday, and then on this day we had a low. Okay, so remember, this high is intact. It has not been altered with, neither has the low of yesterday been altered with. So this is an inside day. So we have day 1 of prices going down, we have day 2 of prices going down, we have an inside day, and then obviously this is the day when this price was altered. Okay, so we had a day 3 of shorts in the market. Okay, and notice how on the same day, notice how it's a Thursday. Okay, notice how prices closed high whereas they opened low. So we did say first green day or first trade day have the prerequisite. Firstly, prices have to go unidirectional for at least 3 days. Okay, to make it better, it could be 2 days sometimes, but for us to get the best result, let's say prices have been going down for 3 days. Okay, and on the day itself they did try to drive prices low. This traps everybody going down. This is our okay, let me just erase this. Let me bring in a okay, this, you see this, everybody selling in this box is automatically trapped. Okay, everybody selling in this box is automatically trapped. So let me just use a red color. Okay, it's fine. It's okay, so everybody selling here is trapped. Okay, what did we say? When they want to buy, what will they do? They will actually show you a sell. Okay, so now let's return again. This is a first green day. Okay, and look at what I'm expecting. I'm expecting a dump. Okay, a dump, 3 session dump is very good. I'm expecting sometimes it won't be 3 session, you have to understand. Okay, sometimes it will be the session in which the currency moves. If it's GJ, for instance, or any currency that has the pound in it or the euro in it, it's more likely to move during the London session. So you might not get 3 sessions. Okay, that's something to understand. I'm looking for a dump, then a pump, and I want to get the pump to at least this level, okay, sometimes they will go through the high of Monday. Okay, so mostly what most weeks will do is they will pull you into one direction and punish towards the end of the week. Why? Because people get to chase this downtrend. Okay, and as people are chasing the downtrend, people are using different time frames, right? So all over here we will have a lot of stops. Some people are gonna enter here and put their stops here, some enter here, put their stops here. So day traders will put their stops here. Okay, they'll put their stops above the day, because they put their stops above the candle, and if they are trading on a daily time frame, obviously that candle will be a daily candle. Okay, so you have to know there are stops all over. As prices are going down, there are stops. As prices are going down, there are stops. Okay, so this is why most of the time this day will actually come and close this, guys. So this is the day that we are looking for. Okay, in this case, this is a day 2 continuation. This is a day 2 continuation. But if you look at 1, 2, okay, inside day 3, this was a day 3. This was a day 3. Okay, so now I used one example to hit 2 stones. This was a day 3, and after day 3, they're more likely to reverse. So this is the trade I'll be looking for on a day 3 setup. We did talk about 2 setups, right? We talked about the day 3 setup, and we talked about the day 2 continuation. So if you look at this example right here, we have a day 3 setup, okay, where they reversed and punished people from these guys got closed over here. They were in profit. So on this day, they went beyond closing everybody from yesterday. Okay, everybody from yesterday, and then again they tried to send people down. Okay, and then they just pumped prices. Okay, they pump prices. So this is a day 3 setup, this is a day 2 setup. Okay, so you can just flip the table, you can just flip the tables. Okay, so this is how the week is mostly gonna be. Okay, this is how the week is mostly gonna be. Although sometimes, yes, they might take you up one day, take you up 2 days, and then on the 3rd day, which will be Wednesday, they can punish. Okay, so we don't enter blindly. Let's go back. I just wanted people to understand what a day 2 continuation is. This is a day 2 continuation. Okay, but it started by giving us a day 3. So we are starting with this one. We'll come and explain this one. Okay, so let's go back. We're starting with this one, so let me just erase this right line over here, because it might just confuse people. Okay, so on a day 2 continuation, we have 2 types of day 2 continuations. Okay, we have day 2 continuation longs, and we have day 2 continuation shorts. So I'm gonna try to explain all these things. Okay, which one should we start with? Obviously, let's start with shorts. Okay, so let's say prices okay. I don't really want to re-explain this or redraw this, but it's fine. Let me remove all the drawings in between, even though I felt like they were gonna work when I'm explaining the other part. Okay, but let's just erase for simplicity's sake. Okay, this is a week. Okay, so guys, it's not about the day on which you are actually trading, it's about looking at the bigger picture. Okay, which is the weekly, which is what is happening throughout the week. Okay, paying attention to last week's key levels. We have already explained about key levels. Okay, so right now I need okay, let's use the green one. Okay, say for instance this is a Monday. Okay, and then prices rise on a Monday. Oh, this is a bad rise, because markets are not like that. Say maybe on a Monday they start by dumping prices, and then obviously prices go up. Okay, and this day, say maybe they dump prices, because the dumping here, you must understand the dumping on the following day. They are just trapping, showing people to go down, because they want to buy. Say on this day again, they take prices up. So now I'm going to use a different example whereby we don't have an inside day, because sometimes we're going to have an inside day, sometimes we're not. Okay, so on this day right here, what okay, say for instance this day don't start by dumping. Why? Because it's the 3rd day. They want people to buy. The third day is mostly the aggressive day. If they are gonna be selling on that day, they will be aggressive. Okay, so let's say they take prices aggressively high. Okay, they use 3 sessions in this case. Okay, this is a day 3. Okay, day 1 of prices going up, day 2 of prices going up. Okay, and then now this is a day 3. What they are most likely to do is they are most likely to trap, and then boom, punish. Okay, they can punish on this day. They can punish on this day. Okay, so one thing we have to understand is we have different kind of template on the week. They're gonna do different kind of things. Okay, and that's the most important thing to understand. However, we are paying close attention to our setup. Okay, say for instance they punish on this day. Okay, let me just say, because you are looking at day 2 continuation on the short side. Okay, so maybe this day let's just say maybe they decide to punish and then come and close here. They punished and they closed everybody from this day and they closed here. Okay, now let's say on the following day, this is a first red day. Okay, I wrote nonsense, but it's okay, you understand it. Okay, it's a first red day. Actually it should be in red, but it's fine. I don't want to waste a lot of time trying to perfect it. First red day. Okay, this is a first red day. Okay, because prices didn't just open here and close here, which is opening high and closing low. No, prices have been going unidirectional for at least 1 day, 2 day, and 3 days. Yes, the day itself is the 3rd day because prices went up high. Okay, so this is the first prerequisite, it's met. And the second prerequisite, on the 3rd day, what did they do? They sent people out. They send people high violently. Why? Because market makers will do what? They will always okay, fine. They will always do what? Let me just bring this here. They will always pump prices to dump them, or they will dump prices to pump them. So this is what happens. Now, on the 2nd day, what are we looking for? We are actually looking for a pump. Why? Because directional bias, we are expecting a sell. So to get a sell, we need a pump. Why? Because this pump over here serves 2 roles. Firstly, let's bring in our triangle, which was this one. When we get something like this, you see, this is now a triangle. I just wanted this triangle to be something like red. Okay, okay, let's see. Can we make it red? I don't know. Okay, can we make it red? Oh, perfectly. Now it's red. Okay, I wanted this. If you check right here inside this box right now, okay, if you check inside this box right now, everybody going up is what? Is trapped. Okay, so that's where we are expecting a dump. Okay, that's where you're expecting a dump, because these guys over here were in profit, and the people who were actually buying here were in profit, which is the main goal of this market makers. They want people to buy so that they can sell. You see, this is a day 2 continuation. Okay, this is what I'm talking about. We get a first red day. We are looking for what? We are looking for a pump to dump. Okay, okay, and say maybe it closes here, and the following day say maybe they dump prices. So this is gonna be what? Day 1 of prices going down, day 2 of prices going down, and now we just activated the 3rd day of prices going down, and it's on a Friday. What are we expecting? Mostly, who is in profit? People who sold, they are in profits. These prices can just violently, with the help of news, of course, most of the time, they can come and close these guys here. Okay, but remember, market makers are in no rush. Sometimes they can just consolidate them, but this is the concept I want everybody to understand. Okay, this is in a week, so prices tell a story throughout the week. Okay, every move is intentional. There is nothing that is coincidental. Remember, market makers, or whatever algorithms they've employed to move prices, they do not move prices in a coincidence. Okay, every move is calculated. Every move is calculated. This is why every time, or most of the time, you will find a stop hunt during the equity opening time, because every move is calculated. Okay, so this is something you have to understand. Okay, So for us who understand this, this is going to be a day 3. This is going to be a day 3, but I'll explain this one later. Okay, this is where prices are pumped then dumped. You see, these guys were in profit on Monday. Friday they're locked out. Okay, Friday they are locked out. That's the main objective of the market. Yes, I know there are weeks which, okay, prices will just be going down, but even if they go down for a week or two, there is gonna be a pump that is gonna close all these guys who are in profit. Why? Because nobody's gonna be allowed to exit with a very big win. Okay, you have to understand that, or else sometimes you'll find that, okay, people will just buy here and hold and then make millions. And if that it was the case, ask yourself, from whom will those millions be generated from? Okay, they will be coming from market makers. In this way, market makers will be losing. So this is why they don't want people to exit, to always be on the winning side forever. They will come back for you. Okay, so that's something to understand. Okay, so right now with this one, we explain the shorts. What are we looking for? We are looking for, if it's a short, we are looking for okay, it's okay, wait a minute. Yes, correctly. If it's a short, if we are looking for day 2 continuation shorts, we are looking for a pump to dump. This is what I explained right here. Okay, this is what I explained. This one was a first red day, this one was a day 2. Okay, day 2 shorts. So we were expecting this pump so that we can get this dump. Okay, so our price is always going to behave like this? Obviously not. That's why I spoke about the fact that we are hunters. Our role or our goal is to analyze a day before and look for instances where price behaved in this manner. Okay, look for instances where prices behaved in this manner. Okay, let's just look at something right now. Okay, let's just look at this. This is AJ. Okay, AJ, if you look here, I just chose this week. Okay, prices were going up, and all of a sudden we get a first red day. This is where prices opened here and closed here. They didn't just do that. They didn't just do this. Wait a minute. No. Okay, fine, let's talk about this. Yes. This is where prices were actually, because I'm not going to count this. Okay, this is where prices, let's see what prices did. Prices actually closed here and they opened here. So this is one part of the definition, first red day. But here's another part. Prices have been rising for a number of days. 1 day, 2 day, let's see. Let's see. Okay, fine. We can say that prices rose from here. For many days, prices have been rising. Okay, rising, and on this Tuesday, prices decided to you see what they did? Okay, good. This is good. Okay, so this is another prerequisite. Prices have to be going unidirectional for a number of days. Okay, and then they have to obviously open high and close low, and then they have to send people into the wrong direction. You see this candle over here, this is a 1 hour time frame. If you go to a smaller time frame, you'll see they send people up. Okay, they will raise prices so that they can do what they can sell high. Okay, so if you look at this day over here, you see what prices did. What did prices do? They pumped prices. They pumped prices to drop them. And as I said, I'm not looking for all the most back down here. I'm looking for 50. This was a very good day. This was a very good day where they gave a triple top. They pumped them and then gave a triple top, then dropped prices. But on this day, they didn't reach down. They actually did what? They closed as an inside day, and the move was continued the following day. Okay, but let's look at this right now. This is a day going down. This is an inside day. Let me just mark these days for everybody to see. Okay, this was a day 1. Okay, of prices going down, so we're gonna use a red color. Okay, this is a red color. Okay, this was a day 1. Okay, and this one over here was an inside day. Okay, now we are looking at flipping the table. This was an in day. Okay, this was an inside day. Okay, and this one over here was a day 2. Why? Because prices have gone down and broken for the second day. Okay, this is day 1 going down, inside day pause. Day 2, prices going down. And over here, this is day 3 of prices going down. Okay, this is day 3 of prices going down. Okay, so if you look at this right here, we have day 1, day 2, day 3. And then what do they do? What do they do? What do they do? If you look at this, looking at this, what did they give? What did they give? Okay, they trapped, guys. And then on this day, they went up again, throw people down. Okay, throw people down. But this year is not a good first green day. But if you look at it, they send people down. Okay, and send people down here before the session start. But this is not a good first green day. Okay, it's not a first green day. Okay, because they have to send people down. But already there are people trapped here, and they did send people down during the US session. So everybody, literally everybody going down, maybe inside this box, is trapped. Okay, everybody going down inside this box is trapped. It's important to identify trap volume. Okay, very important. Okay, so everybody going down here is trapped. Okay, what do they do? This is a first green day. Okay, what do they do the next day? They dump prices. They dump prices. They dump prices. They dump prices. They were news on this day, and then they pump the prices. You see, we need this dump. We need this dump. Okay, we need this dump. Okay, we need this dump. Okay, that's what I want you to see how it looks on the charts. But for now, guys, it has been a long video of already, but it's fine. Let's just continue. So you saw that if it's shorts, we're gonna be looking for a pump to dump. On the example I've showed you on the charts, it's actually longs. Okay, it's actually longs. Okay, we will look at short examples on the chart, but they are the same as let me show you. They are literally the same. Here it is, day 1, and then they pump prices to drop them. Okay, this is for the short side, and if you look here, this is for the long side. Okay, this is for the long side where they dump to pump. This is what we need. Okay, day 1, day 2 continuation, day 3 in the markets, boom, they punish, and this punishment comes on the next day. The same apply to here, day 1, day 2, day 3, punish. Okay, so these are the things you should be able to identify. Okay, on Monday, people who sold here were in profit. They got punished the next Tuesday. Okay, so it's always a pump and dump, and the other side is the quickest one. Okay, so these are the things we must understand. Okay, day 2 continuation is this one where they pump prices, gave a triple top, a beautiful triple top, boom. Okay, so even if you took this trade, as you could see that, okay, they are not going down, you could have closed it already. You were in a big profit. Okay, already you were in a profit. Okay, so these are the things I just wanted everybody to see. Now let's continue with our lesson. I know it's getting longer, but it's almost towards the end. Okay, so if we are looking for day 2 continuations on the long side, I've already showed you on the example, but we will be looking for what? For a dump to pump. In this case here, we were looking for a pump to dump. So it's the same. If we try to flip the tables, it's gonna be roughly the same. Okay, I'm gonna reuse this box because the most important thing to know is trap volume. So let's look here. Okay. So now we are looking in terms of longs. Okay, we are looking in terms of longs, but I did explain the long side, guys. I did explain the long side. Where was that? I did explain the long side. Oh, when I started, I explained the long side, that if prices have been going down. Okay, let's say another example. Monday prices are going down. Okay, okay, it's fine. Let me use a green color. It's okay. Okay, and then they pump them. Tuesday prices go down. Okay, and then they pump them, and then they go down again. Okay, and then on this day, say Thursday, this is the day 3. 1, 2, 3. But sometimes if they don't give the day 3, move on the day itself, they'll give it the next day. So let's say prices go up, they go down, and eventually they manage to come and close high. So this went down unidirectional for about 3 days, and then on the day itself they managed to send people down and get them trapped. Okay, this is the most important thing. Now if we were to bring the box down here, you will see that everybody selling down here is trapped. Okay, everybody selling in here is now trapped. Okay, so this is a first green day. This is a first green day. So obviously the next day, what are we looking for? We are looking for a dump, which the dump on a bigger time frame, in this case, is more likely to give a this is beautiful, guys. If when you start seeing these things, this is gonna be amazing. Okay, this is the shoulder, this is the head, and this is the shoulder. You will be seeing this quite a lot. We are looking for this dump for a pump. This could be the initial target. Okay, this could be the initial target. However, highly possible, once they close these guys over here, the high of yesterday, they'll be coming for these guys, and obviously they might end up coming for these guys, because these are the guys who will be in profit. Okay, so these are the most important things to identify. So this is a day 2 continuation in terms of long. Okay, I just wish this makes sense. They go down day 1, they go down day 2. As you see, they are just breaking the lows of the previous day, which is a sign that they did go down. They did go down. Okay, and on this day, yes, they went down. This was a 4th day, but it ended up becoming a first green day. So yes, sometimes they will go down for 4 days. This is quite common. Okay, but the most important thing, of course, to understand is trap volume. Once you have trap volume, we are now looking for this dump, which of course induces guys to take a short again, and gives market makers the opportunity to keep on buying. So we want to be actually buying in them when this move is confirmed. Don't try to catch the lows, because you'll never know the low until the low is in place. Okay, wait for the low to be locked. Okay, what is locking? Obviously, if we were to zoom this part down here, we will find something like a W. Maybe on a 1 minute time frame, we will find something like a triple bottom. On a 5 minute, this is 5 minutes, we might find a W. This is 1 minute. And on a 15 minute, we might find something like a pin. Okay, this is on a 15 minute. Okay, so a pin on a 15 minute might be a double bottom on a 5 minute, and this one on a 1 minute might be a triple bottom. So it's all about understanding the patterns. Okay, so yeah, once you understand this, everything will become more easier. Okay, so we have discussed what we look for if we are looking for day 2 continuations. Okay, and guys, this video is about to get interesting. Okay, so now the most craziest part, this is a day 3. This one is the setup I put on the playbook. Okay, the playbook, because the playbook has all the rules, all the entries, and everything. Okay, that is what the playbook has. Okay, so let's continue. Let's continue. Now we are actually looking for a day 3. It's gonna be trend, trade, or trend reversal. Day 3s are gonna be trend, trade, or trend reversal. The thing is, I don't want to form a part 2 of this, or part 1 and part 2 of this. Why? Because some people will see one part and then come back and complain, these things. No. I want to make one video that actually accommodates all the parts. Okay, and you will decide. You can watch maybe 10 minutes of the video a day. It's up to you. Okay, so what you do with this information, it's all up to you. Okay, so now we are looking at day 3s. Okay, and okay, let me erase this. But okay, again, I can still use this one. Okay, but let me erase it so that I can start explaining from the beginning. Okay, so that I can start explaining from the beginning. Okay, so guys, let's explain this. day threes are going to be in two forms. They're going to be trend continuations, or they're going to be trend reversals, of course. Okay, that's why we don't enter blindly. That's why we always have this dump to pump to dump thing. Okay, because this one shows us what is actually happening. Okay, because even on this parts, when you have seen the dump to pump, it appears in two levels. It appears okay, let me show you some. Let me show you something. Okay. Guys, it can also appear down here. You see, this is a dump, but it can also appear down here. When we have trap volume, they can take prices high, then dump them one last time after giving maybe a W, and then engulf away from this and then pump. So this is the engulf you need after the dump. Okay, so it also helps with entries, but we will explain that on a separate video, because I don't want to complicate what's already complicated already. Okay, this is already complicated for many, so I don't want to further complicate it. Okay, let me stick on one thing. Okay, so guys, if you want to trade this kind of setup, guys, I don't hide anything. Okay, I've shared everything with you. Okay, okay, let's start. Which one should we start with? Trend reversal, because trend reversal is my favorite. Okay, I don't really like the trend continuations, because most of the time the target for me becomes a little bit harder. So let me explain day three reversals. Okay, again, it's gonna be longs and shorts. Okay, and we look for the same thing, dump to pump or pump to dump. So let me explain trend reversals on day three. Trend reversals on the shorter side. I always prefer starting with the short side. That's why even on this one I started with the short side. Okay, so let's say prices are taken up on Monday. Okay, Tuesday they pull back, they continue. This continuation is not make sure, guys. Let me start again. Let's say prices are taken up on Monday, then Tuesday, correct, and then they are taken up again. This is day two. Okay, and then on the third day, let's just say this is the most violent day. Mostly they might not pull back, so now they're gonna be on the third day, and they are more likely sometimes they will just do this, okay, and not reverse on the day. Okay, so the following day we might get something like an inside day, something like this. Okay, and then on a Friday, say for instance, we get prices where they got taken up and then boom, they are dropped. Okay, so I'm just trying to use different kinds of template, because you must understand that each week will come with a different template, but understand the bigger picture. So for a single pair, I will say it will be fair to get roughly 2 trades or 1 trade per week for a pair, unless you are taking the day 2 continuation. Okay, but for a day 3, usually it's gonna be 1 or 2 trades per week for on a single pair. Okay, so looking at this template right here, okay, this is day 1. Okay, let me rather use something more sophisticated. Let me just say day 1. Okay, where they took prices up. Day 2, okay, let me just duplicate this anyway. Let me just duplicate it and say this is what? This is basically our day 2 of prices going where? Up. How do you know prices are going up? Obviously, if prices are going up, they will, this is the let's say this is the high of yesterday, they will break this high. Okay, when they break this high, that's when you know that we are on the third day. Okay, so let me duplicate this again. When we duplicate this, obviously it's gonna become a day, inside day. Okay, okay, it's gonna be an inside day. The following day here, it's actually gonna be an inside day. So this one over here, it's a day 3. Okay, let's say this is a day 3, or let's say this is a day 3. This is a day 3. Okay, this is a day 3. Okay, this is day 3 in the market. Let me try to, I don't know, Okay, let me try to delete this part. Okay, because sometimes, let's say, okay, let's say I just want to give an example that you all understand. This is the high, and the high hasn't been broken, and this is an inside day which has a high over here. And let's say on a Friday they come, obviously this guys here will be in a profit, and this guys here who sold maybe here will be in a profit as prices are taken down, and we are more likely to see them being closed out. Okay, or sometimes, let me just reverse again, or sometimes, okay, or sometimes let's just say they will come and close these guys over here, okay, and do not close these guys. Sometimes they will, sometimes they won't, provided if they already have people trapped over here and they sold starting from here, because market makers, whenever they take price high, they want to sell. When they sold here, obviously the people who bought here have been trapped, so people who have their orders filled here, they are not in most cases going to release them. So on this day we might get something like boom during the US session. Okay, so this is a day 3. Okay, it's just that it came in different form, but as I've already alluded, the most important thing to understand is this one. This is the most important thing to understand. Everybody buying inside this box is trapped and will get punished. Okay, so the most important thing is actually understanding trapped volume. Okay, so this is a day 3, and on this day, on a day 3, what did we say? On a day 3, on a day 3, on a day 3, on a day 3, if we are looking for shorts into the market, what are we looking for? We are looking for a pump and dump. You see what I've been talking about. We see, okay, this is where they, okay, they drum and they pump prices here, they pump prices, and all along they've just been pumping prices. When they pump, maybe during the US, that's where you get your entry, and that's where you actually get the best trade. Okay, or else sometimes, let me just use a different example, okay, because I want to give people different examples. Say this one will be a day 3. Okay, so after day 3 we might get a pump which doesn't come and close these guys here, okay, which eventually punishes. And most of the cases, day 3 moves can come to the low, or at least they will come and close people from the previous day. Okay, so that's why it's not always good to aim high for many pips, but you must understand that they are more likely to come and close people from here. These are day 3, where day 3s are in the market. Okay, so mainly it's the same thing. I think I'm getting tired right now. This video is way too long. Okay, this video is way too long and I'm getting tired. Okay, so this is trend reversal on the shorter side, okay, where we will be taking short trades. But on the long side, where we will be taking long trades, it's gonna be the opposite of this one, which obviously, let me just give this last example. Okay, for the continuations, I don't know if we will do them today because I'm feeling exhausted right now. Say Monday, Tuesday, Wednesday, and then Wednesday plays and plays and plays. If it doesn't punish the same day, most likely we will get this, and then we'll get that last pump, boom, for a punish. Okay, so these are the things you must understand. Okay, these are the things you must understand. Okay, or sometimes they will obviously do something like this: day 1 Monday, pull back, day 2 Monday, and then on the 3rd day they might not pull back, they might be aggressive. Okay, so they are dumping so that they can just and punish on the same day. This is also more likely to happen. That's why we are looking for a dump to pump. Okay, so it's always a pump to dump. Even during the session, before you open a position, you have to see what are they doing. Are they pumping to dump on the level? Okay, but we'll talk about those things. But this is what happens. Okay, so one thing you should understand: who is trapped? This guy's over here. Everybody's selling, and selling here is trapped. Okay, so this is what will happen most of the time. And again, we have trend continuations, where, for instance, let me just do it quite quick right now. I'm not gonna go deeper and deeper. I'm tired. Okay, let's say trend continuation on the shorter side. Let's say, for instance, on Monday they do this. Okay, and then Tuesday they do this, okay, and then Wednesday they do this, okay. So today they are on a day 3, day 1 shorts, day 2 shorts, day 3 shorts, okay. And the following day, say maybe yes, we are expecting a day 3, and they just pump prices, and during your session they do this, they pump prices one last time. Obviously this is a pump to dump. This is where you might see a continuation. So it's not about entering blindly. You need to know how they're behaving on the session, okay, on the session. We will go deeper into this, but right now I'm feeling a little bit tired, so I think I should end right here. The same applies to if it was in the opposite side. If, say for instance, on Monday prices went up, pullback, prices went up, and then on this day prices went up, and then this day here they dumped, pumped, dumped for a pump, okay. So this is obviously a continuation, so you can't enter blindly just because yesterday was a day 3. You want them to actually keep on going down. No, sometimes they will give a continuation pattern, but the most important thing that will give an alert or an idea of what's happening is the dump to pump or pump to dump. So guys, okay, for those who want this this diagram, you can you can take a screenshot, because I said I will make it downloadable, but you can also take a screenshot. Just take a screenshot of this, okay. Take a screenshot, pause and take a screenshot. We will continue. It's just that now the video has been over an hour, and I'm obviously feeling tired, and you know, if I'm tired, obviously I might not give the best, okay. So guys, I thank you so much. If you are new, kindly subscribe, and if you're part of the family, hit the like button, share and comment, okay, for the sake of the algorithm. The more people this could reach, the more people will actually get help, because there's just a lot of content out there that is messed up, okay. So I'm not saying this is the best, but this works, and I want to share something that is working for me and will ultimately work for others. So guys, I really appreciate you, and thank you a lot, okay. Thank you.